Welcome to Beyond Bitcoin, a podcast about all things digital assets, the global communities they are creating, the generations that are using and investing in them, and the challenges faced by the nations that are seeking to regulate them. The content of this program is not to be taken as investment advice. My name is Derek Graham. I'm the CEO of Portal Asset Management, and my co-host is Nitin Gower, Director of IBM Digital Assets and CTO of Portal. So good morning, good afternoon, good evening, wherever you are in the world. Welcome along to Beyond Bitcoin. And today we have a special guest. And our guest today is Jimmie Lenz. And we are so pleased to have Jimmie along and chat to us. But there's someone missing. So Nitin's missing. He's missing in action because it's past midnight in London right now. And that's where he is, our world traveler. So today it's just going to be the two of us that are going to wander our way through the world of non-fungible tokens. I do hope you enjoy. Welcome along, Jimmie, and hello.
Hello, thank you for having me. This is always fun to talk about this, and it's a subject that is very near and dear to me.
Terrific. Well, maybe you would do yourself a favor, us a favor, and introduce where you've come from, how you've meandered to that space, and then let me have a little bit of a discussion about NFTs so we can sort of set the world for this.
Yeah, more than happy to. So I'm Jimmie Lenz. My current role is as Director of the Master of Engineering in FinTech and the Master of Engineering in Cybersecurity at Duke University, where I'm also the Salerno Visiting Professor of Financial Economics. All that means is I'm a teacher at the end of the day. I teach in the graduate school at Duke. My past, though, is very different. I actually started off in financial services. I started trading equities and derivatives, more years ago than I want to admit, and kind of moved into the electronic and algorithmic area of trading. I really enjoyed that side of it, mostly because I was a terrible salesperson, and so I would rather deal with machines and computers. So it just worked out better for me in the long run. But I was lucky enough to progress, and I ran a couple of firms and had the opportunity to work as the chief risk officer of the second largest brokerage firm in America, as well as the head of credit there, and then had led predictive analytics for a little while before coming to academia, and I love being in academia. It is it's a kind of a dream come true. Not only does it allow you to put your education to work, but it allows me to pass on everything I know as many times as possible, and that is my teaching philosophy in a nutshell.
Oh, that's fantastic. I've got to say, I studied at UWA. I'm doing an executive MBA, and I used to UWA's University of Western Australia, and I used to just call it my happy place. It's just such a great environment of people that are keen to learn and progress and imaginative thoughts, etc. And I think Duke's damn lucky to have you. And so are we. Thank you very much for coming along. So look, a little bit of background on NFTs. And I'd have to say, if there was a sector in this entire world of cryptocurrencies and digital assets that's misunderstood by mainstream, it'd have to be NFTs. NFTs are probably because, what we saw as we saw Beeple's, first 5,000 days sold for $69.3 million back on the 11th of March last year. And that brought this attention to the mass media. And the mass media from then kind of thought, this is an awful lot of money for JPEGs and pixelated icons, isn't it? And so they clearly just didn't get it. And then they continued not to get it. And what we did see, however, is an enormous growth in this unusual marketplace that is the beginning, the genesis of NFTs. In 2021, there was some $100 million of NFTs traded, according to DAP Radar. But by the end of, that was 2020, sorry, by the end of 2021, $24 billion were traded. That's a 24-fold increase. No, it's a 240-fold increase on the previous year. And so you can see how quickly people have adopted this fascinating space. But really, the future is so much more than digitized art and collectibles. Really, NFT's future could be anything from concert tickets to mortgaging and transacting cities full of real estate, to being a member of a community, to being part of a game or in a metaverse and owning digital assets in a metaverse, or saving the Amazon tree by tree. It's quite extraordinary, the depth and breadth of what these digitized assets will ultimately bring. I remember when I first entered this space in early 2017, I started walking out of the home where I was reading white papers and watching videos, et cetera, on it. And I looked around and everything looked like the Matrix to me. Everything was dripping with green numbers. And I just thought, wait a sec, everything can be digitized. And that was in early 2017. And now, everything is heading towards digitize. But we have to realize that if we do digitize assets, fund managers, superannuation funds, all that we do business with around us, the efficiencies could be extraordinary and it could change the way we live. And you're right in the middle of it, Jimmie, because you're creating and working and teaching in this space. We're really keen, of course, to hear your views.
Yeah, no, I agree with you 100%. I think it has the, it certainly has the possibility of changing things quite dramatically. I teach a couple of blockchain classes. I teach blockchain classes at Duke, and I also teach a very similar class on Coursera for Duke. And we do, and because I'm in engineering school, we build things. It's not theoretical. People always ask, why are you in the engineering school, not in the business school? And the difference is engineering is very applied. Everything is very applied. Business school is more theoretical. Not one isn't right, one isn't wrong. They're just different. And I just like building things. I always have. When I was a little kid, I took stuff apart all the time. I always had extra parts when I put it back together. I don't know.
I have cars like that.
Yeah, we all have cars like that. You and I, we probably shouldn't spend too much time together. That could lead to bad things. But I think that NFTs are really interesting because my course on Coursera, I was thinking about it, and students were asking about the certificate. So it's a fairly long course. It's a whole semester long, and it has homework, and you have tests that you take, and it's just like a regular graduate school course. But my students are all around the world. So last semester, I had students in South America, North America, Europe, Australia, Asia, subcontinent. I mean, they were literally all over the world. And so they were asking about their certificates and when they were going to get them and emails. And I thought, why are we doing this? I can create and make them non-transferable and just download them into their wallets. And so I didn't tell anybody. I worked with a couple of guys that were Duke alums. They have a company called PayMagic, and I wanted to make sure everything looked good. And so I got all the approvals at Duke quietly, which was like an act of Congress, and then got the approvals at Coursera. But they were everybody was very excited by it, which was kind of cool. And so we minted these NFTs, dropped them, and I sent an email to all the students saying, check your wallets. Now I knew they all had wallets, and I had their wallet addresses because that's what they used to do their homework on. We created the virtual wallets in class, and so I had all those, and sent it and said, open up your wallets and see what you have. Oh, by the way, switch to the Polygon network.
Don't pay for this.
Right. You have to be cost conscious when you work in academia, and so we did it that way. But it worked out really, really well, and a lot of attention, and people got very excited by it. And so I started looking at the possibilities, other possibilities, and one from more, I think maybe a little bit more from your world, for a portfolio management world. One of the things that I traded a little bit, but I trade a lot for myself, was debt, bonds. And you always hear the excuse, why don't bonds trade like stocks? Well, there's so many of them, and they're all so unique, and that's why, instead of, it's because every dealer in the world wants to rape you on the fees and on the spreads, which is really the truth. But think about putting these on NFTs. NFTs are non-fungible tokens. They're all unique assets. Oh, just like a bond? Okay. We could start trading bonds using NFTs and create a real market and a competitive market, and where the spreads weren't a mile wide. It has so many possibilities. I couldn't wait to tell you that one because I knew you had worked in the space.
and the thing about that, Jimmie, of course, is that you build it to a smart contract, an NFT with a smart contract, and it's got its termination date, it's got its pay dates, everything is built into the contract. There's no arguing about it; just happens. where is there a need for the trader? Where is there a need for the rent taker in that process? There isn't. And as you say, because they're so unique, you can design every one. The same thing, if you look at it, is right across the stock markets of the world. There's some 640,000 listed companies. I did some research on a little while ago, and this is a realm I'm used to being in. I've listed 4 companies on the ASX over the many years. And those 640,000 have got fairly dumb stocks. It gives you a right to vote. You can transact it because it's digital, but after that, it's dumb. Imagine what would happen if you turned every one of those into NFTs and built smart contracts around them.
It would make it so much different. I mean, it's easy to put waterfalls in there. And oh, by the way, we could do that for any kind of assets. We could do it for any kind of derivative. Think about insurance derivatives and some of the edgier insurance derivatives, things like that. That are always taken to litigation before they pay off and things like that. If you would put these on a smart contract, there would be no litigation. It would be paid off. It would be done. Move on to the next thing. I'd written an article, I don't know, maybe a year ago. It was right after all the GameStop stuff here in the United States, and Robinhood, and people were wondering what's happened. And so I wrote a little article that said, maybe the next iteration of a stock exchange is actually a cryptocurrency exchange. And not that I hold them out as the best places in the world because their user interfaces aren't great, but they've taken a lot of the middlemen out of the equation. So you look at, Binance or Binance US or Coinbase, wherever, it doesn't really matter. They act as the broker, they act as the exchange, they act as the clearing mechanism, settlement mechanism, and they can be the custodian. And oh, by the way, there is no settlement risk because everything happens instantaneously. So the DTCC is out of the equation.
And by the way, there's total visibility of the transactions because they happen instantaneously and they're all on an immutable chain.
Right. I mean, it would seem to be, a much better way to do things. I have not seen all of those other interested parties racing to that solution, though.
Well, when you look at the New York Stock Exchange, by example, Jimmie, you're looking at a group that owns a number of exchanges around the world. Mm-hmm. And the first thing that I found was interesting is that when Coinbase came out, they were immediately capitalized at more than the US Stock Exchange and the collective exchanges they own. And that was interesting, 69 billion versus 100 billion by memory. And you'd have to say that's because the future of a major digital exchange is greater than the future of an analog exchange like the exchanges we exist on now.
Absolutely. I mean, by their very definition, the analog exchanges can only have so many participants. It's very limited, the number of participants, whereas digital exchanges, it's pretty much limitless. And when you think about it, it's the growth has been tremendous, and that's even with user interfaces that just aren't that great, as we talked about before. They will mature, they will get better, and all that will make it seamless. People won't even know what they're transacting on. They won't need to know they're transacting on the blockchain. They'll be able to do it effortlessly, and it will just happen. And when that occurs, I think that's when we really start seeing some extraordinary things. But I do think there's a lot of opportunity for development still, a lot of opportunity.
Where are we in this scale of development?
I would say we're not even at 1.0. I would say we're at 0.5, 0.8. We're not even at 1.0 yet, honestly. And I think that's for a number of reasons. One, it's still very fragmented. We haven't gone through the consolidation phase, which we will. And you see this huge bifurcation in cost. We were kind of laughing about it before. Some networks have exorbitant fees to transact on their chains, whereas others are almost free. It's always some cost, but there's just it's exponential. The difference in cost, things like that will have to coalesce, or there will have to be some sort of difference in service that is provided. And right now that doesn't occur. So there are a lot of things like that, but I think user interfaces are really the number one. I would say those are the number one area for maturity. And that's happening every day. I think that people are so excited to go in and do new things that nobody's taken a step back and built worked on just kind of the boring user interface side of things.
Yes. the breadth of this is getting expressed in a few ways. One of them is there's 126 different exchanges that are sitting there, and they're doing extra. They're swapping. They're swapping analog, we'll call it, cards, sports cards for different teams around the world, or they're swapping art, or they're transacting, some more, let's say, serious transactions. Some of my friends in the art world would get annoyed with me for making that statement. But there's so many different exchanges doing so many different things because the platforms are so varied in what these NFTs are doing. So there's probably a lot of consolidation opportunity there. NFTs should, at the end of the day, be these non-fungible tokens representing a token of your assets, whether your assets happen to be a ticket to the Rolling Stones in 3 months' time, or whether they happen to be your house. And those wallets need to be secured for that purpose, and they need to be easily accessible. But when you digitize an asset, Jimmie, like you digitize your house, all of a sudden that makes your mortgage lender both globally an opportunity to lend, and also a pool. Would that not be right? So people could individually lend money to mortgages.
Absolutely. I've been a huge advocate of fractionalizing homes and lending that way. Think about it this way. If you took a home, average home in the United States is about, I'll say $375,000 now. Outrageous, but be that as it may, if you took that and cut it into and fractionalized into 100 pieces, so each piece is $3,700. Investors could buy those directly, and there would be 100 tokens. The owner would buy one token, and that would also give him the right to live there, or her the right to live there. And they would pay out every month, just like a mortgage. They would pay out to the other token owners. It's a simple process because it's a token. That token could be sold very easily because the payment is paid to the token, not to the person. Yes. And so things could be financed, very directly that way. So instead of actually going to a bank, you have 100 owners of this home. So if the home's sold, everybody profits from it. If the price goes up, if the price goes down, everybody shares in the loss. Yes. And so it's a very, very different concept than a bank that is winner take all, right? The bank is always winner take all. And so it's a very, very different concept. And I think that's a really good use case, something along those lines. The one thing it I think could do, or the central banks are not going to be happy about things like that, right? Because it removes fractional banking from the system. Yes. All of a sudden, the currency, the floating currency, is taken out in a huge way, and it actually consolidates because no longer are banks lending, out 94 cents for every dollar they take in. Now everything would be in cash, basically. But it would give, retirees, say they want, instead of buying a bond, or instead of buying into a bond fund that's, has management fees and all kinds of other things, they could buy into 100 houses and receive a steady flow of income from that, while at the same time supporting their community. Yes.
And that's extraordinary. I mean, I had regularly thought about the concept of obviously mortgaging, but fractionating the home so that profit can be generated in the form of capital gains to the lenders is quite extraordinary. Yet use of the property is still provided to the primary owner or right to use of the property. It's very clever. And these things are enabled yet again because it's digitized. And the minute it's digitized, borders around the world are absolutely irrelevant. So, I've often thought of the concept of, a major commercial building in a city, so often owned by big superannuation companies. And these seem to just move from one superannuation company to another, frankly. They're commodities in themselves. They're pretty architecturally, but they're commodities in themselves, and they give a return. Let's just call it 8% return. Probably not, but let's say it's 8% return. And if you look at this world where you could fractionate it, Jimmie, wouldn't you be able to fractionate something like the Sears Tower, which I think is now called something else in Chicago, but nonetheless, and you could fractionate that, and all of a sudden people all around the world could own $100 of it. And that $100 could be returning them 8% per annum. Well, that kind of sounds a little frivolous in some ways, but if that $100 US is returning 8% per annum, that's not all bad for, you know, a woman in India in a village who's saved $100 and wants a stable currency with an 8% return in something that also might have a capital gain to it. And you're putting a traditional finance product out, fractionating in a way never done before. Could kind of change the way the globe does its transactions. But will
Absolutely.
that cause some governmental problems, do you think? And some...
Yeah, I think it causes, definitely it would cause some governmental problems. Governments don't like you, you know, transacting across borders, and they lose the power to obviously affect interest rates and things like that. Although it seems to be happening now anyway, but they lose the power to do those kinds of things. And obviously, you know, the stalwarts in the financial services industry aren't going to just sit by and let something like that happen. And so what we're seeing
what
now
can they do, Jimmie?
is,
What can they do?
well, regulation.
Yeah.
They'll lobby for more regulation. That's what they've always done, right? They make the entry higher and harder, and that reduces the competition, and we're seeing that happen around the world. I would say the vast majority of regulation in this area that people claim is for the good of the investor is absolutely for the good of the industry.
Yes.
There's no doubt about it.
Yes, it's so true. It's fact, you know, we talked a little bit earlier about the concept of disintermediation of wealth, which we've spoken of before, you know, which is the breaking down from one great generation of wealth period to another great generation of wealth period, which is around technology and generations themselves. And as we know, Generation X, Y, and Z is active in this space, and their knowledge of it is extraordinary. And so what I find a little frustrating when I see this, particularly even in our case, we as a fund, we have to provide our investment opportunity only to accredited investors, sophisticated investors. It stops, you know, the younger generation, those that might have $10,000 or $5,000, investing, you know, in a fund that is capable of managing this space and going into this space without them proactively being involved with it. And so why is that barrier to entry there? Constantly, because the government says we're protecting investors. And I think it's a barrier to entry to wealth.
Yeah. I think it's a huge barrier to entry, and it's a very, very difficult thing to, as things become more available, as things become digitized and borders fall, it becomes more and more and more difficult, I think, for governments to continue to enforce something like that. We will see places, and we're already seeing them, tax havens and things like that, that you see a lot of attracting a lot of people that are very active in the space.
Yes.
And I think that we will continue to see those kinds of things occur.
Yes. And so I laugh when I used to travel into Australia and out of Australia. We're not doing that at the moment, of course, but you have to tick a box that says, I'm not carrying any more than $10,000 of cash with me. And just how archaic is that when you can travel, you know, not travel at all and just transact your tokens in the form of NFTs or anything else across there. So looking at this space, you know, we're going to see this fractionalization of financial products. We're going to see, hopefully, I feel this way, a disruption to the clubs that run financial products currently around the world and the borders that run it. Do you think regulation is just going to be able to stop that?
No, I really don't. I've lobbied pretty hard for, I've had the opportunity to speak a couple of times in the past, probably 2 or 3 months, to legislators. We have a group in Washington, D.C. called Duke in D.C. And they do a lot of things for alumni groups and educational groups. And they sponsor a lot of educational events. And so I've had the opportunity to speak at 2 in the last, like I said, 2 or 3 months, probably, to legislators. And one of the things that I said is, please, you know, legislation is fine. Regulation is fine. Make sure it's informed. It's very informed. And I said, call me. I'm happy. I will be, you know, I will keep it confidential. I will do whatever I can to educate you as much as possible. Please do not regulate in a vacuum. That is my fear, is that happens. And all of a sudden, you know, when there will be places that will be very open to this, and they will just attract the development, because people forget most of these companies are virtual companies. They may say, oh, we're headquartered in the United States. Well, they could easily say we're headquartered in Spain, right? Yeah. They're virtual. They may have a PO box someplace, but that's it. Their staffs are usually virtual. They're working remotely, any place in the world. And so I think that what could happen is this could be a huge opportunity for governments, huge opportunity for regulators to spur on development in certain areas. It could be, this could be, to me, a real competitive advantage for some countries that, go in and actually invest in this and encourage people to develop in this space. Yes. And then there's going to be other places that, don't want to see development. Well, we've always seen that, right? We've always seen people that close themselves off to innovation and technology. Usually doesn't work out well. We'll see what happens this time. But I think it could be a huge competitive advantage, and countries should see it that way.
I totally agree. I am biased, however, but I totally agree with what you're saying. The ability for nations to be able to grasp the opportunities in digitizing assets and currencies and knowledge bases is the difference between someone with foresight that's living into the future and taking advantage, and a laggard, which is likely to be hurt by this. If you flip it on the flip side, this is going to hurt. This is going to hurt a lot of industry that is traditional, because they won't be able to adapt to it, or they'll adapt too late, or they'll try and regulate it around it and cause themselves an island for a period of time until ultimately they can no longer be an island. And so, but the upside of this is globalization in a way that we've never seen before, and without the context that we remember globalization to be, because this really is just a boundaryless world of transactions. And so, knowing that we're running out of time, because we can talk about this for hours.
Yeah, good.
In fact, I'd love to have you on again to chat about this, because I think there's so much more to non-fungible tokens.
Well, it would be great to do it in person.
It would be great to do it in person too. When they let us out of Australia, so we're allowed to come back, we'll definitely do that. Or maybe you can come here.
I would love to come there. Yeah. I was waiting for the invitation.
Terrific. Well, there's your invitation. You've got it.
There you go.
And so really looking at where NFTs sit into this whole world, they have to be considered not just that of the color of art, or even sort of the effectiveness of financial industries. They are a way of creating movements. They're a way of creating communities. They're a way of bringing communities together to do movements. And like I said, to begin with, saving the Amazon one tree at a time, looking at what we can do in regards to saving the Antarctic and the North Pole. And each one of these things is capable if you can digitize it in NFT and wrap smart contracts around it.
Do you have time for one short anecdote?
Please.
Okay, so one of the things that happened, so we did this, I did the certificates and did them as NFTs, and students went crazy and they went all over social media and all that kind of stuff. And so I started receiving a lot of messages personally and on social media from students in schools and all those kinds of places. But the sector that I received the most, probably the most messages by a fair amount, were actually employers. Employers were right. I was kind of surprised too. They said, this is the greatest thing I've ever seen. I would love to see this used more often, because fraud around diplomas and work experience is just rife. And so all these people were telling me stories about people that had claimed to have either diplomas or work experience that they were later found out not to have had. And I mean, I had probably over 100 of those stories that were sent to me from employers all over the place. And I never realized it was that rife. But I mean, to lie about your work experience, maybe, or push the envelope a little bit, but about a diploma, I would never do that. But apparently there are a lot of people who will. And employers that contacted me said this would be like the greatest thing ever. It would be so easy. I don't have to pay a clearinghouse $10 every time I look at somebody. I could just go on, look at the URL and see, oh yeah, this, I can look at the institution that granted it, Yep, that's their wallet. Oh, this is the person I'm looking at. It's their wallet. Great. And I've substantiated it in 2 minutes instead of waiting for a registrar or paying a clearinghouse or any of those kinds of things. I was overwhelmed by that. So what I'm getting to is sometimes there are these other beneficiaries that aren't even front and center. To me, I thought, well, this is really portable. This will be easy for students to show that they have the credentials. They can prove that they did it. But employers were the ones that just lean onto this in a huge way and said, this is one of the coolest things I've ever seen.
So where to for your project then? You've created something for your students. Are you going to see that that's going to grow and blossom and commercialize?
We will be moving ahead. Yeah, we will be moving ahead to do a little bit more. Yeah.
Terrific. So how can we watch this space? Is there a way of being able to follow it?
I'll tell you what, we'll do a follow-up on it.
Terrific. Well, look, I'm going to put you on the spot because I'd like to ask you if you wouldn't mind doing a webinar with us sometime, a little bit of a longer format, a number of different people that might be able to ask questions along the way, an opportunity for our audience that's listening now to join, which they all know Portal Asset Management does webinars every month. And it would be great for you to join and communicate to the audience there who are really, I guess, they're fascinated by the space, but they are invested across the space. And it would be terrific.
I would be more than happy to do so. You just tell me when and where, but I would be more than happy to do so.
Oh, thank you so much, Jimmie. Now, look, we have to finish now because we're going to run past our time, which is so terribly easy to do. Obviously, a big thanks to you. For the audience that's listening along the way, if you'd like to catch up and speak with Jimmie along the way, that's JIMMIELENZ. You could probably catch you via LinkedIn, I'd imagine.
LinkedIn or Twitter.
Or Twitter. And there you go, and be able to communicate and catch up with Jimmie and ask him any further questions. And of course, me, you know how to catch up with me along the way. We look forward to being back next week on our next topic along the way. But let me say this about what Jimmie's doing and about the NFT space. It's just the beginning. Thank you so much, Jimmie.
Thank you. It's been a pleasure.
We hope you enjoyed our weekly conversation. If you have any questions, comments, or suggested topics, please feel free to connect with either Nitin or myself on nitin@portal.am or derek@portal.am. Feel free to subscribe and share with like-minded friends. Stay well, inquisitive, and engaged. See you next week. Bye for now.